These are, when you're going to get a loan for commercial real estate, it's going to be one of these type of loans, if you will. These are the entities where you can go to get loans. Then is the CMBS, commercial mortgage-backed securities. This is for like your top end of the scale, over 5 million and stuff. You can do it for smaller. These are when they give you the loan, they package these loans, they sell them at the secondary market in Wall Street, and Wall Street can actually classify them. This is, if you watch the movie The Big Short, this is what collapsed the market because they started getting very poor loans to people that could not afford them with teaser rates, and it backfired, and it was a major disaster. But that market still exists, but I wouldn't start there. You would probably start right here, the second type of lenders, which would be what's called regional or local lenders. Regional like Wells Fargo, Chase Bank, Citigroup, Bank of America. Those are national lenders, or you have some smaller local lenders or the credit union or something. Go to there, and what they will do is they're going to ask you for certain things. Okay, so what are they going to ask you for? One, all lenders will ask you for what's called the 3 C's. You know what the 3 C's are? Credit, character, and collateral. Credit, character, and collateral. They're going to run your credit. Oh, but it's a commercial loan, Sharif. Does it matter? Yes, it does matter. They're going to run your credit. They're going to look at your character. How does a lender review your character? What they look for is, have you been arrested? Have you been in default? Have you had lawsuits? And their application is going to ask you these questions. Have you been to jail? Have you been, so many things. Now, does this mean you're not going to get the loan? No, just disclose. Disclose and explain. Disclose and explain. You'll be amazed. Unless you went through foreclosure on real estate before and had a criminal offense of maybe stabbing a banker, I think it's going to be against you. But in reality, character, they want to know who you are, what you do, what's your background, what you do for a living, etc. And then collateral. Then they're going to look at the property. All right? So when you look at this about you and your credit, let me explain to you something. You want to get loans? Money, to make big money, you need the leverage from the banks. This is the most important thing. So the most important thing of this is get your finances in order. Get your finances in order. If you're unable to grow, it's because you don't have your financial statement, you don't have your credit report, and you don't have your taxes, and all your affairs ready to be presented to a banker. Get them together, prepare a package, have an accountant or somebody work with you. If you are so messed up that you don't have anything, start small. You don't have to start with an apartment building. Success comes from incremental positive progress validated by yourself. You say, okay, I'm doing well here. Okay, I'm doing even better. Okay, I'm going to keep doing more. As you validate your small successes incrementally, all of a sudden there is a tipping point. I started with the duplex by borrowing cash advance on my credit cards and getting a loan from the bank. And when I got the loan from the bank, this is back in 1989, when I got the loan from the bank, I didn't have money to actually rehab the property the way I wanted. So I said, I didn't know what to do. So I started asking people, started networking, and I found out there was a program called Title I at the time. Now that program is changed to the 203K or something. And they said, we can give you money, it's a government loan, we can give you money to invest on a property, to improve it, and you can pay back in 15 years. So I got a chunk of cash from the government. The broker killed me with her commissions and all this, but she came in so nice, so sweet. I thought, like, what a thoughtful, nice lady. She could be my grandma. And then I saw the rates. It was too late for me to renege on the deal. That grandma, it was unbelievable. But anyway, I paid a lot of fees to get that loan, paid off some of my credit card debt, which was now starting to be very high, and I took the rest and I improved the property real nice. And then I split it and I sold it. And I made a lot of money. But the thing is, I learned from the first deal now what the banks want to see. I started preparing packages. Today, I have full-time CPAs, I have full-time in-house attorneys. So when we talk to the lender, the local lender, they have my package. So all I need to do is, can I meet with you? And I show up and I say, here's the property I'm interested in. What can we work out? And they can tell me. Now, the problem with regional and local lenders is they're going to ask you for, let me put it in red here. They're going to ask you for personal guarantee. Personal guarantee. So people ask me, Sharif, what's more important, my W-2 income, my 1099 income, or the property income? Well, I'm going to tell you this. If the property doesn't have enough income, you're going to become very important. They're going to want personal guarantee. They want to see the down payment to be higher. And they may not want to go 25 years. They may go just 20 years. They may not want to go 30 years. They may go less. And they may not go 7-year fixed. They may say, in 5 years, you got to refund. So you become more important if the property is not producing as much cash. They're going to ask you, what's your plan for the property? Once they plan it, you're going to rehab it. Well, let's then look at the market. Let's get to look at now, number 2 is going to be, see, number 1 is you. Number 2 is the property. The property. They're going to ask you for what out of the property? The right role, the condition, and the appraisal. Excuse the mess on this chart. I didn't know I was going to write so much, but I have so much to share. So what are your plans for this property? Oh, I'm going to close these 1-bedroom units, going to open up to be 3-bedroom, 2-bath, and I'm going to furnish them for executive recruitments and for executive relocations because the area has this. They're going to then look at the market. They're going to look at the area demographics, and they're going to say, we like your plan. But it's not going to be a 20% down payment. It's going to be a 30% down payment. And we need you to sign a personal guarantee. But then you make it happen. They may also ask you for what I call certain conditions. They're going to say, I need an example of conditions. So I like to tell the bank, hey, what conditions you have? I can comply with any condition. So for me, the condition of my loan, still today, and I have millions of dollars invested, the conditions, for example, is yearly, they have the right to ask me for my property tax, for my actual personal taxes, property taxes, like all the property portfolio taxes under any entity, that can ask me for an updated financial statement, and they have the right to ask me certain questions about the properties. And I would not go to any other lender before asking them first. So those are their conditions. And they're okay with no prepayment penalty if I'm going to pay off the loan with my own money. But if I finance with another lender, they're going to charge a prepayment penalty because they say, sure, if we give you the best deals, keep the relationship with us, work with you. You substitute us with another lender, we have a prepayment penalty. We charge you less to start the loan. You're coming directly to us. There is no brokers involved. I go directly to them. I love it. Now, can you use brokers for these commercial loans? Yes. You can use brokers, and it's not my favorite thing. I always will tell you, go first to a couple local lenders. Because sometimes local lenders have special programs. Oh, for 95150, we have this special program for anybody investing in 50 units or smaller. We have a 30-year with prepay of only 2% for the first 2 years, interest only for 5 years. Take it. Now, you can't find a good deal with the local lenders? Then call a broker that specializes in the type of properties that you do, storage facility, apartment buildings, retail, etc. So let's review. The bank is going to look at you, your credit, your character, your collateral. They're going to want to see your financial statements, your credit report, the taxes you paid personally and professionally, if you have any other businesses or properties. What are your general affairs? What do you do? And what are your plans for the property? They're going to ask you for personal guarantee and probably a decent and pretty large down payment. And the terms will vary based on all these variables. Then they're going to look at the property. The property, they want an appraisal, they want the rent roll, they want to see the condition of the property, and they're going to actually ask you for some conditions. We're willing to give you the loan based on this, if you let us do this and that with you for the first X number of years. Once you pass this and build credibility with the banks, second loans and second requests to grow are so much easier. Always, the hardest thing is to start. Most people, the start stops them. So sometimes you have to go through hell And the only way out is to go through it. So you actually grow and can actually deal with anything. But one of the most important things you got to master is how to deal with lenders. Third type of lenders is agency debt. Agency debt, why is it called agency? Because they're government subsidized agencies. The Fannie Mae, and Freddie Mac, right? These will ask you lower down payment, longer term debt, and they may even work with you to do a refi within 2 to 3 years. Check there. Ask brokers who deal with this. You can Google them. Broker, put zip code, Freddie Mac, Fannie Mae, and let's check the programs. Know what they want, prepare a package, talk to local lenders, talk to brokers, talk to these guys' agency debt. When you grow and you're going to start doing these 15 million, well, over 10 million, etc., you can also look at the CMBS loans. CMBS packages are not so easy. Sometimes they have defeasance. I don't want to go into all these terms. This is like a whole training by itself. But they have certain conditions and say, we'll give you a lower interest rate, but you can cash out for 10 years. You can do this, you can do that. So you have to be very careful here. Start here, check here, and make it happen for yourself. Knowing how to deal with banks is half your way to wealth.